So given the age group that we are in, maybe we are in the age group of 20 to 30, or maybe till 35 or 40 or whatever, we are in the initial part of our careers. The first 15 years we can consider it to be the initial part. So that is where we can take risk in our portfolio. All right, we have a lot of human capital left. Human capital, as in we have a lot of work that we are going to do in the future. So we are quite safe from that aspect, that yes, the flow of income is going to be there, given that we'll be working for the next 15 years, 20 years, 25 years. So that part of our income source is pretty sorted. So when we talk about investments, that is somewhere where we can actually take risk. So I personally recommend people to get uh, acquainted to stock markets, either directly or through mutual funds or through ETFs and all those things. But yes, that for me is the hierarchy, that yes, we should be very much okay to invest in the stock market, whatever the route be. But because we can take that risk, we can afford that kind of risk, we can afford that kind of volatility, or we can afford that kind of moments that happens in our portfolio, given that we invest in the stock market. Because the line is not going to be linear. The line will be having a lot of ups and downs, and we should be ready for that. But in the longer run, it goes up. So I do not think that is really a problem. Take the example of COVID-19. When it struck India, the market fell down by approximately 45% on the index level, but it bounced back. All right. So the line is never going to be straight. It's going to be in a zigzag way. But we can, but we should be completely be okay to take that kind of exposure. So yes, you are doing a pretty fair job that you're investing in the stock markets. But as a beginner, what I feel is, investing it through ETFs, mutual funds makes a lot more sense, because when we start doing that, there's somebody else who's managing the money for us for some minimal fee that we are paying him, which is fair. So that is something that I really feel that when we invest through mutual funds or ETFs, we are giving our money to a professional who knows stock markets in and out, who analyze things very beautifully, and then he invests the money on our behalf and then passes us a return. So that is why ETFs, mutual funds make a lot more sense to me for people who are starting their investment journey. So in the initial 5 years, 7 years, 10 years, that should be the route where through which you can park your money in the equity markets, and later on you can come and explore direct investments, options, futures, and all those more riskier asset class, given that you get acquainted with how the markets work. So given that setting up the context, what I genuinely feel is that mutual funds and ETFs make a lot more sense for all of us. And how do they actually work, and what kind of factors you need to look into before buying a mutual fund is something that we'll discuss. So Siddhant, I'll talk about ETF in a while. Let me speak about mutual funds in one go, and then I'll cover ETFs as well. So there was this question that what actually ETFs are. So I'll take that up. All right. Okay. So see, the first thing that I would like to start with is there are a couple of things that we need to answer. What is mutual funds, how it works, and why mutual funds, why to go ahead with mutual funds. The why aspect of the question I've already answered, that when we are a newbie and when we are immature in terms of investing, this particular route is a little safe for us, because we are handing it over to a fund manager who has a pretty good experience in terms of investing. So these are few questions that we'll be answering: what, how, and why. But before we do that, we can understand mutual funds through a very simple analogy of pizzas. So as you all know, there are different types of pizzas, and at the very same time, every pizza has different toppings. All right. So say for example, there's a vegetarian pizza and there's a non-vegetarian pizza. So when I talk about vegetarian pizza, you'll have all the vegetarian stuff, all the vegetarian toppings. And when I talk about non-vegetarian, you'll have non-vegetarian toppings. So likewise, mutual funds also work in the very same way. कुछ म्यूचुअल फंड्स ऐसे होते हैं which invest into equity markets. When I talk about equity markets, I'm talking about stock markets. All right. And then there are some mutual funds, like we have veg and non-veg pizzas. There's some mutual funds which invest into bonds. Bonds, as in it could be government bonds, it could be corporate bonds. Bonds are basically fixed income instruments. Fixed income instruments का मतलब हुआ कि how simply borrowing works. When you go to a bank, you ask for money, or you rather borrow money. So that basically you and the bank are that you're tying up yourself in a bond. Those kind of instruments are the second, way how mutual funds work, or where they invest. So we have equity mutual funds, and then we have bonds mutual funds, and then we have uh, gold mutual funds, which invest particularly into gold. So likewise, these are the broader asset classes where mutual funds invest. All right, they invest into equity, they invest into bonds, they invest into gold. And likewise, कुछ म्यूचुअल फंड ऐसे भी होंगे जो हाइब्रिड होंगे. हाइब्रिड का मतलब वेजिटेरियन नॉन वेजिटेरियन टॉपिक में दोनों डालते हैं. तो इक्विटी का भी कुछ प्रपोर्शन आएगा, गोल्ड का भी कुछ आएगा, और बॉन्ड का भी आएगा. सो दैट इज हाउ आल्सो दे वर्क. So a very simple, analogy in terms of how mutual funds work. Think of it as a pizza. There are different types of pizzas, like where there are different types of mutual funds. And when we talk about different types of mutual funds, we have, based on the asset classes that we have. Within those asset classes also, we have some bifurcation. But right now, what we need to understand the broader picture is that yes, we have different asset classes, and based on the asset classes, we have different types of mutual funds. Now, let's say we are talking particularly about vegetarian pizzas. All right. So when I particularly talking about vegetarian pizzas, what I understand from that is there are going to be a lot of vegetarian toppings on that. All right. So for me, for us right now, let's say that vegetarian pizzas are equivalent to equity mutual funds. All right. So vegetarian pizzas equal to equity mutual funds. So जैसे vegetarian pizza में there are, say for example 10 things that are going on a pizza. In the very same way, equity mutual fund में there are 10 to 12 companies or 15 companies or 18 companies that act as a topping or basically as act as an ingredient to that mutual fund. All right. So वो जब आप उस mutual fund के through invest करोगे, so what will really happen is your money will go through those 15, 18, 20, 25 companies. That is how it will work. And say for example, आप non-vegetarian pizza की बात करो, which was equivalent to bonds in our case. All right. So in that case, invest in that kind of mutual fund, what will happen is you'll invest into bonds which are of different companies. Again, those are the toppings of that non-vegetarian pizza that we're talking about. So this is how exactly mutual funds work around. Now it is completely dependent upon us where we want to go. Do we want to go for a vegetarian pizza, or do you want to go for a non-vegetarian pizza? If you're going for a vegetarian pizza, basically in our case we are going for an equity portfolio. When we are going for a non-vegetarian pizza, we're basically going for a debt portfolio or a fixed income portfolio sort of thing. And likewise, we have gold and other asset classes. So this is how it works around. So did all of you get this basic idea that there are different types of mutual funds, and based on where you want to put your money, you can select the kind of pizza you want. Does everybody has understood that part? If you can reply it in the chat box. In case if anybody has doubt, they can straight away unmute themselves and ask me. Yeah. Okay. Yes, Santosh, please uh, unmute yourself. Unmute yourself and ask me this.
Yeah, just wanted to know that bonds again.
Okay. So bonds. See. Let's say there are five companies listed in the stock market. There's ITC, there's Infosys, there's TCS, there's Maruti, and there's Adani. All right. All these companies borrow money from the public as well. All right. They do not only borrow money from banks, but also borrow money from the public. When they borrow money from the public, they issue bonds. Bonds are basically what I am public, and the company is asking me that you as an investor pay me 1,000 rupees right now, and I'll give you back a regular income of 10 rupees, 100 rupees every year. Say for example, 100 rupees every year. So those are bonds. And in case if you want those kind of investments, you can basically invest into bonds or bond mutual funds. Does it make sense now?
Yes.
Okay. Chandrasekhar will talk about debt mutual fund in a while. So elaboration of that particular funds or the types of fund is something that we'll do. Do not really worry about that. Okay. So this is something that we need to understand, that there'll be a lot of mutual funds, and among those mutual funds, how can we really classify it into it is into equity mutual funds, debt mutual funds, and other mutual funds based on the asset classes that we have. That is something that we can. Do. Venkatesh will talk about all those things. Yes. Okay. Now, the next thing that I want to understand, that I want all of us to understand, is about how the workflow of a mutual fund really works. So, when I say we, I'll always mean we as investors. All right. So, this particular set of people would be us. All right. Now, how mutual funds really work is, say for example, there's a pool. All right. So, all of us are coming together, and we are contributing some amount of money in this pool. Say for example, Pratik is contributing 1,000 rupees, Anil is contributing 2,000 rupees, I'm contributing 500 rupees, Ketan is contributing 10,000 rupees. All right, Kanaya is contributing 20,000, Jagan is contributing 35,000. All right, so we are all contributing some XYZ amount in this particular pool. All right, And imagine it in a way that, when it happens at country level, the amount that this pool gets is a lot bigger. It goes to as high as 10,000, 15,000, 30,000, 40,000, 50,000 crore. All right. So that is what we all do. We basically are investing in this pool. All right. The moment the pool becomes of a decent size, the fund manager comes into action. He takes up the pool and starts managing that fund. Now, when he starts managing the fund, what he exactly does here is he starts investing using that funds. So basically, he's making the best use of those funds that is available. So that is, say, for example, right now we have 10,000 crore. So 10,000 crore is something that he'll be using to invest into stocks, securities, bonds, or whatever, depending on the kind of mutual fund that we are talking about. So, say for example, the fund manager that we have invest only into equity funds, or invest into only into equities. So he'll be called an equity fund manager, and he'll be only selecting companies, and he'll be selecting, say for example, 15, 20 companies from various industries or various sectors or whatever. All right. So far what we have done here is we have a pool of money. All right. That pool of money is, say for example, 10,000 crores. We have given that money to the fund manager, and the moment that we have given the money to the fund manager, what he does is, according to his expertise, the fund mandate, that fund manager would start putting across that money into securities. When we talk about securities, we can also call it as stocks. और तो stocks में पैसा डालना शुरू कर देते हैं हम. All right. So the moment he invests it into stocks, there's some movement that is going to happen to the funds. All right. So वो 10,000 crore जो invest हुआ है, now that 10,000 crores will go either up or down, and it will sometime go more up, sometime it will go down, and likewise something or the other would keep on happening, because as we all know, the prices of stocks keep on moving. All right, that is not something that remains constant, or it increases linearly or it comes down linearly. It keeps on moving. There's the volatility there. All right, things go up, things go down. So given that the stocks move up and down, the value of this 10,000 crores would also move up and down. How exactly? Say for example, that 10,000 crore is invested into 10 stocks, and cumulatively those 10 stocks increased by 10%. So automatically the 10,000 crores would also increase by 10%. That is, it would become 11,000 crores. All right. So that is something that we need to understand, that this particular pool of fund is getting invested into stocks, and then those stocks, the returns or the movement of the stocks get reflected into this fund that we have. And those returns, as in when it starts to come in, what the fund or the mutual fund manager does is he returns he passes on the returns to us as investors. Again, when I refer to us, I'm basically calling this set of people. So the idea, the workflow is pretty simple. There's a pool of fund given to a fund manager. He invests into stocks, and then he generates returns, and he gives it back. All right. Not always the case that he'll be able to generate returns, but yes, in the longer run, stock markets do generate returns. I mean, there has never been the case that where stock markets have not generated returns in a 10-year, 15-year, 20-year time frame. In India at least. All right. Japanese markets, ये सब markets में ऐसा हुआ है कि markets से 10 years तक perform नहीं किया, but in the Indian context, it has never happened that the stock markets have never performed in such a longer time frame, 10 years, 15 years time frame. So that is something that we need to understand. We as investors pull our money given to a fund manager. He invests, he generates some returns and passes back to us. This is the simplest of workflows that we can understand for a mutual fund, how a mutual fund would really work around. All right, so I'm pretty sure that you might have understood the workflow of a mutual fund. All right, I do not think यहाँ पे कुछ issue होगा. So before we move ahead, there are some key terminologies that I'm going to use and use repetitively in this particular session, and I'm wanting you to be acquainted with those terminologies. So first one is AUM, asset under management. Now, what this asset under management is basically the total sum of money that has been pooled by various investors. So in our previous case, that amount was 10,000 crores. So that 10,000 crores is nothing but the AUM, that is asset under management. All right, so I am able to see few diligent people, making a note. So AUM is basically nothing but asset under management, and that is something I'll be using it on a normal basis here going forward. And then we have AMC, all right, the third one. AMC is nothing but asset management company. So asset management company is basically, जो fund जिसका है ना, उसको वो fund कहाँ से बना? It has been made by a AMC. That AMC is nothing but an asset management company. All right, they're basically managing the company. All right, and that asset management company appoints a fund manager who is basically taking care of all our investments. So AUM and AMC are pretty clear. NAV is something that works in a very similar way to stock prices. All right. So, again, let's take an example. Uh, what really happens here is, say for example, whenever the stock price moves by 10%, आपने एक stock खरीदा है 100 rupees का, it moves up by 10%, so you get 10 rupees return. Likewise, when you invest into mutual funds, what you need to see here in terms of looking at the returns that you have generated for yourself is the NAV changes. The NAV goes up by 15%, you are making 15 rupees there. Or the NAV goes up by 30%, you're making 30 rupees there, given that the base NAV was 100 rupees. That NAV could be anything, but what we need to look at from the return perspective is how the NAV is moving. Say, for example, in 2015, you invested into a mutual fund, which had an NAV of 50 rupees. And today in 2022, that NAV has gone up to 100. So you have made 2x returns. All right, your money has doubled. This is what the fair idea of NAV is. Again, how to exactly calculate NAV is something that I'll speak to you in the next 2 slides. But this is a basic meaning that in terms of looking at what your returns are, you should look at the NAV and not at like how you look at the share prices. So that is pretty sorted out. All right. Now, before I talk about this, let me simply talk to you about how NAV works. All right. So NAV को मैं discuss करता हूँ. Everybody be with me on the right hand side of the slide. All right, and we'll discuss how NAV is working around. All right. So, say for example, collectively in a particular fund, all of us collected some amount of money. Say for example, that amount of money was 1.25 crores. All right. Me, Anil, Pratik, all the financially literate people, all of us, invested 1.25 lakh, 25 lakh rupees, 1.25 crore rupees, and we invested into the mutual fund. All right. So, अब mutual fund manager ने कैसे दिमाग लगाया? He has total of 1.25 CR. All right. So, out of that 1.25 CR, he invested 1 CR into securities. All right. He invested that 1 CR into securities. So, that mutual fund has 1 CR worth of securities, which is stocks in our case. All right. And 25 lakhs, the fund manager has kept it with the fund in terms of cash. कि market में वापस कभी opportunity आएगा ना, at that point in time I'll invest. So basically what is happening here is he had a total amount of 1.25 CR. 1 CR already parked into securities, given that he already witnessed some opportunities and invested the money there. And 25 lakhs has been kept for now, that whenever the opportunity comes in, I'll invest. All right, whenever the markets go down. So that is where his professionalism, his experience, expertise comes into picture. All right, so 1.25 CR is what we have here. Now, like any other fund or any other company, there are some liabilities attached to it. तो जब भी हम कोई भी फंड की बात करते हैं, तो what really happens is there are a lot of costs are attached to it. The cost could be the fund manager's fee. Obviously, he's managing a fund, so he's expecting some kind of fee for that. Distribution fee. So, say for example, whenever an AMC, that is an asset management company, comes with a mutual fund, so they have to distribute it to people. All right, how will they reach to you, me, and other set of people? So that there's some distribution cost attached to it. All right, so there are distributors in the middle who does the work, but that cost is being borne by the AMC. Likewise, there's some administration cost as well. So mutual funds need to make sure that you get to see the NAV value by the end of the day. Every day you need to be, if you need to be updated with the NAV value, that should happen in that case. So all those things, require again some kind of administrative cost in terms of employees and all those things. So there are a few costs associated with, mutual funds. So that we have, say for example, 20 lakhs, we have it in short-term liabilities, already been accrued. We need to pay 5 lakh in long-term liabilities, and there are some recurring expenses of 5,000 every day. All right. There are some recurring expenses of 5,000 every day. So these are few of the costs. That is 20 lakh plus 5 lakh plus 5,000. All right. Now, what we need to understand here is the last thing, that is outstanding shares. All right. So जब भी fund manager ने 1.25 CR इकट्ठा किया रहेगा ना, whenever he accumulated that 1.25 CR from all of us, he must have issued some shares to us, right? How shares, as in say for example 10 people, 10 of us are starting a company, and we cumulatively have 100 rupees there. So हम सबके पास कितने कितने shares आ जाएंगे? 10 shares आ जाएंगे. One person having 10 shares each. 10 rupees. So that is how it works around. So in the very same way, when the total amount of money was accumulated, the mutual fund or the fund manager issued shares to its investors. All right. Those shares are nothing but this 2 lakh shares. All right. So once we have understood how the shares exactly work around, हम NAV calculate कर सकते हैं. So NAV is nothing but this value of securities, whatever cash we have, we added that, and whatever the expenses or liabilities we have, we'll subtract that and divided by the outstanding shares. So outstanding shares here will be 2 lakh. All right, this I'll correct it. Just a second. Yeah. So outstanding shares would be nothing but 2 lakh. All right. All right. So these are the outstanding shares that we have. That is 2 lakh. So this is nothing number of shares that we had. So we have added all the assets, that is investments in securities, investments in cash and equivalent or whatever cash we have, and we've subtracted the liabilities and all those things. And then we have divided it by the number of shares. So we'll get a value of NAV. All right. This particular value after dividing it by the number of shares is nothing but the value of NAV. So NAV is what we need to look at. So say for example, tomorrow this 1 CR stocks increase to 2 CR. What really happens is this particular amount increases. And the moment this particular amount increases, your NAV increases. And the moment NAV increases, you are automatically making returns. So अगर आपने इन्वेस्ट करना है म्यूचुअल फंड में तो एनएवी के प्राइस पे करते हो, आपने विड्रॉ करना है तो भी आप एनएवी के प्राइस पे करते हो. So this is something that we need to understand, that NAV plays the most important role of a share price. That if you are investing into it, you do it on NAV. If you're withdrawing funds from it, you're doing it at the NAV. So say for example, this 1 CR increases to 5 CR. All right. So NAV goes up to NAV becomes what? 5 CR plus 25 minus 20 minus 5 minus 5 divided by 2 lakh. All right. So that is how the value of securities or the value of holdings that you have play an important role on the NAV. All right. So as you can see, the NAV value is directly related to the value of securities in the portfolio. And the moment this value of securities increase, the NAV increases. All right. That is a very basic idea. And that is what we need to look into. So anybody has any queries regarding NAV, because it is a very important term that we need to understand. Yes, please feel free to put it in the chat box. Nidhi, I'll give you a live demo of this. So Nidhi has asked me, how can we check how much cash my mutual fund manager is holding? I'll give you a live demo of this. ETF will not give dividend. Again, ETF, the discussion on ETF will have it. What is your view on 12% club instead of debt funds? Venkatesh, it's a little riskier compared to that thing. So can we get pure debt funds? Yes, you can. All right. How yes. All right. Santosh, the formula is pretty simple. You add all the assets part, that is the good things that you have. All right. All the places from where you can get money from, or the cash that you have, and subtract all the cost that you have. All right. So you have added the value of securities, that is stocks ka jo value ho, plus you've added whatever cash you have, and you subtracted for the liabilities that you have. So whenever this value of securities increase from 1 CR to 5 CR, so automatically this will increase. जैसे ये increase होगा वैसे NAV भी increase होगा. All right. So Vishnu, there is no good value of NAV. NAV could be, you don't need to see NAV independently. All right. Say for example, there could be a mutual fund who has issued lesser number of shares. All right. So automatically the NAV will go up. All right. If this 2 lakh, instead of this 2 lakh, we only have 20,000 units or 20,000 shares. So automatically the NAV will go up. All right. Likewise, say for example, instead of 2 lakh, it had 20 lakh. So the NAV would have come down. All right. So NAV in isolation does not really have any value. We need to look at in terms of returns. कि 10 रुपए का NAV था, 15 का हो गया तो 50% रिटर्न आया. 100 का NAV था, 120 हो गया तो 20% रिटर्न आया. That is how we can. Yeah. So Daniel, there are a few mutual funds which give you tax benefits as well. We'll speak about that. Yes. Okay. But everybody with me on the formula. That is something that I would like to know. I'll answer all these questions. Yes. Okay. All right. Great. Okay. All right. Makes sense. So now what we'll do is we'll talk about types of mutual funds, and how do they really work. So one thing is pretty clear. Whenever we look at mutual funds, we need to see how the NAV has performed or what the NAV price, how the NAV price has moved. All right. Now, when we talk about types of mutual funds, we have already spoken about types of mutual funds from the perspective of asset classes, equity, debt, gold, real estate, and all those things. Now, there are a few things that you must have seen whenever you have gone ahead and purchased a mutual fund. ठीक है, कहीं पे लिखा रहता है direct और कहीं पे लिखा रहता है regular. Who has noticed this? Anyone can simply raise their hand on the in our Zoom meeting only. Yeah. So, Kanhaiya, would you like to throw some light? What exactly is this direct and regular?
No, not really. Actually, I have seen it while I was just
Okay.
exploring it somewhere.
All right. Makes sense. Makes sense. Anyone else? All right.
Yes.
Yeah,
So in
direct, we will directly we are going to invest in the fund, but regular means we are going to invest by some agents or some.
So, what is the better thing to do?
Better is direct because it will give more returns than
Okay.
regular. Yeah.
Perfect. So,
because there are
yeah,
commissions involved in
exactly.
regular.
Exactly. So, you guys are completely right. So, when we talk about direct fund, so what really happens here is that you remember me talking about AMC. So, when we talk about direct funds, the money directly goes to the AMC. All right, it's just two people there, me and my money has gone to the AMC. The AMC has made the investments for me. Then we are sorted. But when regular funds, what really happens is there's an intermediary in the middle. All right, there's a distributor in the middle who is routing your money through to the AMC, and and of course, if he's doing that for you, he'll be charging some commission from you. So direct mutual funds versus regular funds, you'll always see direct mutual funds having 0.2, 0.3% more return regular funds, because 0.2, 0.3% goes to the distributor, and in the direct scheme of investments, that does not really go to the mediator or the intermediary person. So that is something that we need to understand in terms of types of mutual funds. So go for the direct one. Now the only problem is sometimes you may not know which mutual fund to select, and that is where you need the intermediary to come into the picture and speak to you about that. So that is, but after this session, we'll at least understand that how mutual funds can be bought and all those things. So next thing we have is growth versus dividend. Again, very simple. Go for growth mutual funds. Reason being, see, whenever we invest via mutual funds at the end of the day are investing into companies. And the moment they invested into companies, what really happens is companies pay dividends. And in growth funds, those dividends are invested back. Those dividends are used to invest and buy the shares of the company only. But in the case of dividend, what really happens is, that mutual funds, those mutual funds pass on the dividends to you. And that is not good from the taxation perspective. But if your purpose of investing is to get regular income, then dividend fund might make sense. All right. And then we have open-ended and closed-ended funds. So open-ended funds are basically where you purchase the units or the shares of the mutual fund through the AMC directly. Not directly, but the transaction is happening between AMC and you, either through a distributor or not. But in closed-ended funds, the AMC opens the fund only once, issues the shares, and they do not do it again. All right, then you can buy, sell from other investors. All right, say for example, I want to sell, you want to buy, you can sell to that. All right. Yes, Siddhant, I'll repeat the growth versus dividend part. Siddhant, so if you can unmute yourself.
Yes, tell me.
Yeah. So Siddhant, there's a mutual fund. That mutual fund is investing into stocks. All right. So the stocks are, most likely to give dividends. Am I right?
Okay.
Yeah. In growth funds, what really happens is when the companies give dividends to the mutual fund reinvested back in the company only. So say, for example, a TCS has given a dividend of 100 rupees to the mutual fund. So the mutual fund will use that money to reinvest it back in the company itself. So that is done. But in the case of dividend mutual funds, what really happens is they pass it on to us, as in to individual investors. Not very from friendly from the taxation angle. But yes, if you are looking out for regular income, that is something that you can look out for. Okay. All right. Can you please explain what are dividends? Nikhil, dividends are basically, companies distributing their profits to their shareholders. So say, for example, I'm buying a share of a company. All right. Now we're talking about a company, not a mutual fund per se. So when I buy that, And when company has excess cash, what they do is they pay it out as dividends, or they distribute the profits basically. In simple language, that is something we can understand. Anuradha, so you have, does dividend mean returns from a stock? Yes, dividend means the cash return which the company gives. All right. So as I said, a company is working, generated sales of 100 rupees, cost over 80, 20 bach gaya. The company can decide to distribute that 20 rupees among its shareholders, and that distribution is nothing but dividends. All right. So that is how it works. All right. So I think I've answered most of the questions. Yes. Types of mutual funds. Now, see, when I was talking about the cost, that are involved with mutual funds, that particular those set of cost, all right, we can accumulate them and give it a broader head. That is nothing but expense ratio. So, जो भी खर्चे होते हैं mutual fund के, management fees, administration fees, distribution costs, the three main costs which I spoke to you about. When we combine all those three, they become nothing but expense ratio. All right, so that is something that we need to understand. That expense ratio is something that mutual funds charge from investors, that is from us. So say for example, mutual fund has an expense ratio of 1%, and given that you are investing 100 rupees, so basically mutual fund will take 1 rupee from you and keep it with himself as fees, and 99 rupees will be yours, and whatever returns you make on that would be yours. All right, and they charge it on a yearly basis. So say for example, next year your 100 rupee or 99 in that case effectively increases to 140 rupees. So again, they're charging 1% this thing expense ratio. So 1.4 rupees would be kept by the mutual fund, and you'll still have 138.5 rupees or whatever. All right, so that is how it works around. So yes, all right. Now the very most important question that we all are worried about, or we all are here to learn, that is why I kept it in the end. How to select the right mutual fund. All right, so I also have a link attached to it where we'll go and actually see see how we can buy a mutual fund. But what we need to do here is we can access to any platform that gives you the right to buy the mutual funds directly. All right, I'm hoping that we all understand how to buy funds, and हम लोग क्या करेंगे अभी ऐसे एक platform पे access लेंगे जहाँ पे हम mutual fund directly buy कर सकते हैं. So that is something that we'll do, and then we'll filter out the mutual fund for us, all right, based on certain parameters. Here you'll have a lot of questions: why this particular parameter, how to shortlist this particular, how to shortlist based on this parameter. All those questions now will cater them. All right, a few of you had this question in the beginning, but now we can cater to them individually. All right. Can we evaluate mutual fund on expense ratio? Yes, Siddharth, we can. So that is something that we are going to understand. So let me just open the link, and we can see how it will work around. All right. All right. You all can see my screen, right? Yes. All right. Now see, on the left hand side, no, it's somebody asked me, is expense ratio on only on profits? No. If mutual funds make losses, still they'll take that 1%, 2% amount. Now see, here we can see all the categories. These are the pizzas that I was talking to you about initially. Already we have debt fund, we have equity fund, we have hybrid fund. Hybrid fund is nothing but mixture of debt and equity. So likewise, we have solution oriented funds. All right. So these are the types of funds that we have, or the types of pizzas that we were talking about. All right. So yes, solution oriented. Then we have funds based on, we can basically filter out funds based on the risk that is there. So say for example, I am a very risky investor. So I like to take risk, and I'm okay with, more risk, more returns kind of person I am. So I'll go for the riskier stocks. And likewise, if somebody does not want to take risk, they'll basically be on the higher side of this particular parameter. So that is how it will work around. Then we have fund size. All right, then we have fund size. Now, what this fund size is? That accumulation of fund which I spoke to you about. That we have a good pool of investors who are pulling their money and putting it in a fund. It is basically this particular fund size. All right, so that is what it is. Now, let's take an example here. Anyone can unmute themselves. We can basically build upon their risk profile. So,
Kunal, Kunal, can you please clear the fund size again? I might
So
have.
fund size is basically, say for example, when we initially spoke that me, you, there are other people who are investing into a fund. Somebody is investing 10,000, somebody is investing 5,000, somebody is investing 20,000. So when we are accumulating all the funds and giving it to the fund manager to invest, it is basically that fund size.
Okay, okay, okay,
In
okay.
some cases it will be 1,000 crores. In some cases it will be 5,000. In some cases it will be all right. All right. Since you've unmuted yourself, let's try to figure out what mutual fund would be right for you. Yes. So tell me one thing. What kind of which kind of category would you like to go into? Debt fund, mutual equity fund, or hybrid fund?
I would go for that.
Debt fund. Okay. All right. All right. So see, the moment you go for debt fund, you get a list of all the 330 debt funds that are there listed on this particular platform, which gives you access to invest directly. All right. Then what kind of risk appetite do we have? Generally, when we talk about debt funds, we are talking about these three, conditions where we have either a low risk funds, or we have moderately low risk funds, or we have moderate funds. All right. So that
Yeah,
is
but
how. And like,
on risk, I have like a huge appetite. So
sorry,
it's
sorry, on this side.
yeah, I would go with the high, like high or very high
So
or
in that
whatever.
case, you cannot go for debt fund. In that case, you might have to go for equity, because as an asset class itself, debt is less riskier and equity is more
Okay.
risky. So let's
Okay.
go for equity in that case. All right. Now,
Then
in equity also, whether you would want to take more risk, less risk is something that we need to
not
understand.
very high, but high.
Okay, so that is basically what they have given the filter here of moderately high. Okay. Now see, the next thing that we have here is the fund size. So there are a lot of funds out there. There are approximately 2,500 mutual funds which are there. So the good part here is that we should look at mutual funds which have a decent fund size. So fund size अगर decent है, इसका मतलब क्या है कि बहुत agree किया है वहाँ पे पैसा डालने को. So that trust factor comes into play when the fund size is good enough. So we tend to believe that since so many people have invested into it, the right set of people must have been there. A good quantity of people are there. So that would be so. 5,000 to 10,000 crores is what we can have here. 1,000, 2,000 are on the lower side. 5,000 to 10,000 will make sense. Now, what kind of investments are you looking at? Are you looking at SIP returns or one-time returns? What is that? Say, for example, one time for now. All right. Okay. Okay. So now see, you have gotten a lot of funds here. All right. Now you can sort them by returns from high to low. All right.
I
So
would like Parag Parikh.
yeah. Okay. See, so I already invested into Parapara. So that AUM of 10,000 crores means that your amount is also there in that. Whatever 1 lakh, 2 lakh you have invested, that it is a part of the 10,000 crores. All right. So
Okay.
Parag Parik is a fund. Now it is this thing. These things are ranked on the basis of the returns that they have generated. So though this you can note it down if you want to. So the filters that we have applied so far are the fund size, the very important fund size. So it should be between 5,000 to 10,000 crores. So this is a very important factor when we select a mutual fund. After you set your criteria कि मुझे equity में जाना है और equity में मुझे moderately high में जाना है. Alright. अगर आप equity में हो तो आप moderately high से very high के बीच में ही play. You're not in the lower part or moderately low part. This is given that you have selected equity, you mean that you're here in this three. All right. So that is the first thing. You select your risk
Hey,
appetite.
Kunal.
Yeah.
Yeah, if we see the past returns and that
Alright.
expense ratio, everything keep on, it will change, right? If you take
Yeah.
today's one fund and after 1 year, the expense ratio, it will increase, the fund performance will down.
Exactly. I'm coming to that. So
Okay.
yes. So again, two things based on your risk appetite: select the asset class, select the category, select the risk, and the fund size. All right, clear all those things out. All right. Now the third criteria that we have here is the past returns. All right. So as somebody rightly pointed out, past returns के basis पे आप कैसे judge कर सकते हो? Because next year the returns are going to be different. All right. But tell me one thing: who is a better cricketer, Virat Kohli or Deepak Hooda? Anyone?
Virat.
Based on what are you saying this?
Marketing,
Consistency. Based on it?
Benchmark,
brand
and
value and marketing, I would say.
No,
rating.
consistency.
Come into picture, you're looking at his average, right? Average, strike rate, whatever,
value search, yeah, and the rating.
Exactly. So that is what I want to point out here is I am unsure that Virat Kohli will score runs in the World Cup that is coming. But I would like to place my bet because I think that he has been a consistent player and he would do well. And likewise, that works out in a mutual fund as well, though it is not sure that you'll get that kind of returns. But when it comes to selection, you'll select your best 11 on the field. In the very same way, you'll select the best mutual fund in terms of returns as well. So that is something that I would like to point out here. So that becomes your risk appetite category, then fund size, and then we have risk return, past returns. All right, past returns are no guarantee of the future, but yes, it plays an important role to decide where to invest. All right, so let's click in this particular fund and see how things work around. You can, do monthly SIP or you can invest. That is okay.
Kunal,
Yeah.
just one thing. So, what type of percentage it is showing? Like it is in XIRR or like what
Coming
type of
yearly,
return?
yearly return. So what basically it is showing here is, say for example, 3-year annual. All right. All right. So this particular returns that we can see here are holding period return, total. एक साल में 100 रुपया 112 हुआ होगा. And यहाँ पे 26% means in 3 years time, your 100 rupees would have become 126 rupees. So that is what it is showing right now. Okay. Works?
Okay.
All right. Oh, so this is how exactly it looks. All right. Then we have the NAV 20.8.
Kunal, sorry to interrupt. ये जो परख कई सोचो मैं ले रहा हूँ. So it
हाँ.
is showing कि 1 year में ये 112 होगा and in 3 years it will be 126.
Past में ऐसा हुआ है. That is what it is saying. It is not saying कि आगे हो जाएगा. Again. So
ना
yes.
मतलब हाँ, based on past records, right?
Yeah.
So the better option will be कि मैं 1 year के लिए invest करूँ and then वो उसका जो return होता है उसको again 1 year के लिए करूँ, right?
Sorry.
So the better option will be कि सोचो मैं 100 रुपए पराग में invest कर रहा हूँ for 1 year.
हाँ.
After 1 year, I will मतलब उसको निकाल लूँगा and then again I will reinvest it for 1 more year.
So no, so these are past returns. Now it might happen that so आप invested भी रहोगे तो वो better है. Reason being, your 100 rupees becomes, say for example 112 rupees in 1 year because 12% return annually आ रहा है. Now it depends what really happens after that year. So say for example, starting from that year, the returns that come in are 18%. So your 112 rupees will get 18% returns, not 100 rupees. So वो compounding आ जाता है वहाँ पे. It will be more than 18 rupees that is what you will be getting. So remaining invested is very important. That is pretty clear because the money that you have already earned in the first year, that will also make money for you. That is the idea.
अच्छा.
Yeah, so remain invested. I mean, withdrawing, reinvesting mutual funds, that is not really how the game works around. So that is what you need to
So
do.
what do you suggest? If I am going for a risky ones or moderate to high risk ones, what do you suggest? A small term investment will be a better option or a long term? Like
we're looking at long term only, 3 years, 5 years time horizon. All right.
Okay.
So they're basically comparing all the other funds with them, the returns that we've already done. So I'd skip this part. Now somebody asked me, I want to know where my money is getting invested into. So somebody said that I'd select Parag, but I do not really know where my money is getting invested into. So once you click on the fund, you'll see all the holdings, all the instruments in terms of where the money is coming in. Okay, so yeah. Now somebody asked whether I want to know how much of cash the mutual fund is holding. So 87% is invested into equity, 12% the cash holding is being done. Somebody wants to know which sector I'm invested in. So financial tech, automobile, energy, all these sectors I need to look into. Now, if somebody wants to be really active in terms of selecting mutual funds, what they can really do is they can have a fair understanding that अभी market में कौन सा sector चल रहा है overall. All right. So say for example, market में अभी technology sector चल रहा है. Technology sector is doing well. We read few articles, we understand, from the look of it, from after reading a couple of times. So what you can do here is open 8-10 mutual funds and see which mutual fund has invested more into tech. For example, this particular mutual fund has invested 16.3% into tech. So now you can go ahead and look at other mutual funds and see where they have invested. Now say for example, अपने दूसरा mutual fund खोल के देखते हैं, मेरा asset. All right, मेरा asset tax saver. So they have invested 10.1% only. So if you're bullish on the tech sector of India, you would select that previous fund. But if you're bullish on finance sector, so this particular mutual fund has more finance than tech. So all those things you can, look into. Again, somebody asked how much of is in securities, how much of it is in cash. So again, they give you a fair breakup of it. All right. So that is something that we need to look into. These are a little, technical valuation ratio. So PEPB is something that we can avoid. One ratio that I would like you to look at is the Sharpe ratio. So everybody please listen to me carefully. So as I told you that, it's a game of risk and return. All right. How much risk you want to take versus then based on that, you'll be getting that kind of return. So when I talk about Sharpe ratio, जो risk versus return का element है ना, उसको consider करके ये ratio निकलता है. Alright, ratio कैसे निकलता है? Return excessive return minus risk करके निकलता है, but that is something that is not we need to learn because they calculate it for us and give it to us. So Sharpe ratio is basically calculated in a way where the risk and return of it are taken into consideration. Higher this ratio, better it is. So again, when you compare a lot of mutual funds, compare the Sharpe ratio. So if you see a mutual fund which has a Sharpe ratio of 1.8, that is a lot better mutual fund vis-a-vis this one in terms of risk return game. All right. So the fifth point that we need to look into is, the fund size we have done, the past returns we have done, the sectors that the fund is investing into. So that is something that we need to look at. So you can write it down. And lastly, the Sharpe ratio. All right. There's one more. Last second is the Sharpe ratio. All right. So one more factor that I think is very important is expense ratio. All right. 0.56%, which is a very decent expense ratio in that sense. कि आपको ज्यादा म्यूचुअल फंड आपसे नहीं ले रहा, आप 100 रुपए इन्वेस्ट कर रहे हो म्यूचुअल फंड के थ्रू, 0.56 rupees they are charging from you, already inclusive of GST. Again, this is a direct mutual fund investing platform, so they're not really going to add those distribution charges and all those things. So ये direct वाला है, तो इसलिए 0.56 है. Again, you can based on this particular expense ratio compare it with other mutual funds as well. So that is something that you can always do. So these are the 6 parameters based on which you can figure out कि कैसे कैसे चीजें work होती है. Absolute returns, annualized returns आपको जैसे देखना आप देख सकते हो, that is completely fine. But yes, this is how things work around. Alright, the basics of mutual funds are this, and this is how you can select. So say for example, I'm a very risky investor and I want to go for small cap fund. All right, so in that case, I'll go for the small cap funds that we have. Say for example, this particular small cap fund. Now I'll see what exactly the fund returns have been, what are the competitors, how much is the fund size. So जो मैंने select किया उसका fund size कम था, तो I would have rather gone for these 3 mutual funds जिनका fund size थोड़ा सा decent है, 5 से 10,000 करोड़ से decent fund size. Alright, 21,000 करोड़ तो बहुत ही ज़्यादा है. So based on that, I'll do that. Then I'll look at the expense ratio. I'll look at the holdings. Alright, how much of it is it cash? How much of it is which particular sector? Then I'll come and look at the expense ratio 0.35. Alright, so this is how exactly I'll work it out. I'll look at the Sharpe ratio. You can see Sharpe ratio for this is 1.45, which is very good. Alright, हमने last case में देखा 0.93 था. So Sharpe ratio, higher the better. Alright, there's no other possibility. There's no other way to look at it. Higher the Sharpe ratio, better it is. So there are 6 factors that we can figure out. One is again your risk appetite, very important. Fund size, another important factor. Sector allocation, number 3. Sharpe ratio, number 4. Then expense ratio, number 5. And comparison vis-a-vis other funds based on returns, that is number 6. So these are the 6 main factors which I have been looking into, and I if somebody asks me that given that I have a time horizon of 5-6 years, this is how they can really invest. So this is what my notion is. Now you can ask me questions regarding funds.
Hello.
Yeah.
Yeah. So here it is written NAV, which is 27.50. So
Alright.
it is with relative to which thing?
So NAV, it is basically अब जैसे fund के पास 3,455 crore है. The fund has 3,455 crores. And all the expenses that you have, you subtract those, would be around 2-3 CR. So you deduct that and divide it by the number of units. All right, number of units, they do not give you explicitly until and unless you download the mandate. But the moment you divide it by the number of units, you'll get this NAV. So number of units play an important role in deciding the NAV. But higher NAV, lower NAV does not really make sense. The whole idea is you would not stop yourself buying an MRF because it is priced at 70,000 rupees. All right, you still buy it given that if you know that it's a good company. Again, कोई 10 रुपए का share भी है, तो you will not stop yourself from buying that particular share if you know that it's a good share. So the whole idea is when 70,000 rupee thing becomes 1,40,000, the likelihood of it being going from 70 to 140 is as good as a 10 rupee thing going to 20. So likewise,
Correct.
NAV also works in the very same way. 100 rupee NAV can become 200. The likelihood of a 10 rupee NAV becoming 20 is also same. All right,
So
so don't
your
look at it to be
तो
in isolation.
तो
Yes.
your यहाँ पे it's like कि suppose let's say कि minimum अगर हमने SIP में किया तो it's like कि
Okay.
suppose 1000 we have to डालना पड़ेगा, right?
Okay. Yeah, 500. Minimum is 500.
Okay, minimum is 500. So by default, so 500 divided by 27, so that much amount of units I will get.
Yes,
DNA.
perfect. So this explains it all. Yes.
Okay, sure. Got it.
Okay, so somebody has mentioned Bumrah's name. Oh, we are talking about cricket at that point in time. All right. So yes, ask me questions. So there is a very interesting question. What kind of mutual funds are the best place to invest my emergency fund into? All right. So I'll give you an example here. We can simply go for liquid funds here. All right. So they're meant for this purpose only. You can see return ही नहीं आता है, 4% return है. The whole idea here is park your money for 3 months, 4 months. By the time you do not need it, and once you need it, you can withdraw it. There are no charges on withdrawing as well. So that it is pretty simple that way. So Chandrasekhar, I've answered your question. Siddharth, should Sharpe ratio be less or higher? It should always be higher. All right. Okay. Tax exemption में there are two questions about taxation that I think all of us should know. One is from the withdrawal perspective. If you're withdrawing your money, say for example, within 1 year. All right. So what you can do here is the taxation that you'll need to pay is around 15%. That was short-term tax में जाता है. And when you withdraw it after 1 year, the taxation rate is 10% there. All right. This is a simple math. Now there are some funds which help you in tax exemption. So होता क्या है? आप 80C करके एक सेक्शन होता है, हमारे जब सैलरी हम दिखाते हैं या फिर हम टैक्स पे करते हैं, हमारा इनकम टैक्स पे करते हैं, तो 80C में आपको 1.5 लाख का छूट मिलता है. यू गेट एग्जेम्पशन ऑफ 1.5 लाख गिवन दैट यू आर यूजिंग दैट 1.5 lakh for investing in either insurance or tax related mutual funds. So that you can do, and your income tax will get exempted. All right, your income tax will get exempted, and जब आप यहाँ पे बेचोगे तो इसका जो भी लॉक इन रहता है 3 साल का, उसके बाद बेचोगे तो you'll not have taxation here as well. So वो perspective अलग है. Simple taxation 10%, 15%, sold within 1 year, 15%, sold within after 1 year, 10%. All right, equity funds particularly. All right, debt funds keep it separate. All right. What is best, multi-cap or large cap? So Anil, it really depends. Multi-cap has a little more risk. Why? Because multi-cap में large cap बड़ी कंपनियां भी होगी, कुछ mid size कंपनियां भी होगी, कुछ small size कंपनियां भी होगी, तो एक अच्छा mix रहेगा. But when we talk about large cap, we only have bigger companies. All right. So multi-cap is a little riskier, large cap is less riskier. Depends on your risk appetite. If you want more risk, go for multi-cap. If you want lesser risk, go for large cap. Vis-a-vis these two things. Okay. Tax slabs, generally taxation on mutual funds do not work as per your income tax slabs. All right, it works on the longevity of how you're holding it. All right, ELSs versus PPF, which one would you recommend? I would recommend ELS given that you have the kind of risk appetite, because PFF now give you a lesser returns. ELSs में अच्छा आ जाता है. I know you answered this, but okay, there's one poll you guys can answer. Meanwhile, I'll answer the other questions. I know you answered this, but how important is fund size? Using investment in any fund about 100 CR is good. So again, according to me, Siddharth, 5,000 CR fund size is decent enough. All right, 1,000 में भी risk नहीं रहता है, because there's SEBI and everyone involved here. They try to make sure that retail investors are not harmed. But 5,000 works, as a good benchmark. Okay, can you please explain about taxation for debt mutual fund? Anuradha, taxation on debt mutual funds work in a very different way. It depends on what kind of debt are you investing into. Long-term debt में कर रहे हो, short-term debt में कर रहे हो, based on that taxation implies. So किसी को भी अगर tax समझना है ना कि कितना लगेगा, तो I think they already have it here. All right, see, they already talk about taxation here. All right, so ये अपना कोई ये लिक्विड फंड है, तो लिक्विड फंड का टैक्सेशन अलग होता है. इक्विटी फंड जो मैंने बताया वो इक्विटी फंड का था, तो बेसिकली लिक्विड फंड का टैक्सेशन इस तरीके से होता है. दे ऑलरेडी दे मेंशन इट एवरी टाइम हियर. ऑलराइट, सो से फॉर एग्जांपल नॉर्मल कोई
Kunal, can I have one doubt?
just a second. Alright, see here, this is an equity fund, so your returns are taxed at 15% if you redeem it before 1 year. After 1 year, if you're required, you need to pay an LTCG of 10%. Okay, that is how it works around. So that is for equity. For debt, you can look at debt के अंदर क्या tax implication लिखा हुआ है. For liquid, you can look at around in that way. Yes, somebody was asking me something.
Yes, Kunal. See, if the fund manager charges some amount, right? After
Yeah.
1 year or something, but how much amount they're charging? Can we get any confirmation or any emails about that? Or
It will be deducted from your value of investment only. Say,
yeah,
for
it will
example,
be deducted. But how much is deducting? Can we get any intimation?
you can basically use the percentage to, figure out how much has been deducted. Say, for example, here the expense ratio is 0.39. So let's
Yeah,
take an
correct.
example. You have invested 10,000 rupees. So 0.39% of that 10,000 get deducted in the first year. All right. So that
Yeah.
would be, I guess, around 3.9 rupees. All right. So
Okay.
that gets deducted out of that 10,000. Now your value of fund becomes 11,000 in the next year. All right. So again, 0.39% out of that 11,000 gets deducted. So that is something that will keep on happening. They need not send you separately. Though they have it in their mandate and you can access it anytime. You get it on email, but this is how the simple calculation is, and this expense ratios are negligible in that case.
Can you please click on that check past data?
Sorry. Yeah.
Yeah. Yeah. See here, expense ratio keep on changing. How they calculated recently or old one or average?
So see, expense. So basically, okay, it's a very tricky answer, but I'll try to simplify it as.
Yeah.
So 0.39% is an yearly expense ratio which they quote. All right, कि आपको yearly 0.39% charge होगा. But the moment they start deducting it, what they do is they do it on a daily basis. So 0.39% divided by 365 multiplied by your fund size gets deducted every day, which is very negligible. And say, for example, tomorrow, if the expense ratio increases to 0.5%, so what they'll charge now is 0.5 divided by 365 into your fund size. So since that expense is deducted on an everyday basis after dividing it by 365, this change in expense ratio is something that can be adjusted in that in those expenses.
Okay.
Yeah, but again, given that you want to invest, it is something that you should not look into. I think it's fine. If the expense ratio is not beyond 1.1 to 1.3%, you're good to go.
Okay. So how do you compare this with small case?
So small case are a little riskier.
Not the expenses.
The expenses. So small cases directly have a fixed expense. If you want to buy a small case of, say, for example, XYZ fund manager who's charging a fee from you, on the small case platform, you'll automatically see the fee that they want to charge. All right. So divide this particular amount. Say, for example, you want to invest 1 lakh rupees. Calculate your expense amount in terms of rupees, by multiplying it by 1 lakh. See, say, for example, it comes at 50 rupees. Compare it to what the small case fund manager is charging. If he's charging 500 rupees, he's charging 10x more from you. So that is how it goes.
I have a couple of questions. Should I ask directly or should I wait?
I'll take up a few questions on the chat box, and we can make sure that everybody gets a fair chance. So yeah.
Yeah.
Can you please explain about taxation for debt? So I've answered that. Harshal has this question. Suppose I have invested in some mutual funds in past, like 3 years back. I have got good returns in range of 10, 18, 20 different funds. I don't need that money for now. Do I keep the investment in the same fund or should I switch? Harshal, you do not really need to switch funds because you'll incur a tax liability. The good part about investing is that the tax liability does not come in until and unless you sell it. So why sell it now if you do not need the funds and incur that tax liability in rupees terms and actually pay that 10% of your profits? I mean, that is something that I would I recommend you to avoid. How to choose for funds for children's education? Ketan, this is a very interesting question. So it really depends how far that expense is going to come. So Ketan has asked a question, how to choose funds for children's education. So say, for example, right now there's a newborn baby in your house. The education would come in, main education expense would come in 18 years down the line, say, for example. So you can select a very riskier fund there because the timeline is on the higher side. All right. Bigger the timeline, riskier the fund you can take. If it is 20 years, you can go for risky funds. If it is 5 years, less riskier. If it 2 years, even less riskier. So that is how it works around. All right. So Harshal, I've already answered your question. Abhishek, if I have invested through an agent in a mutual fund, can I check the fund details on Grow? Not really, Abhishek. So you'll have to speak to your agent only. He'll send you a physical copy or a soft copy. I think that would be. Your thoughts on Lakshmi Chit Fund? Not really. I do not have any thoughts there. We have Anuradha in this particular meeting as well, so I'd not comment on Lakshmi Chit Fund. I've already been investing in small case and would like to know if I should start. Daniel, if you have that kind of risk exposure and you're okay with small case, because it really happens that, the fund managers that are there on small case, they invest in lesser number of asset in securities, and they generally tend to make more returns given that, what kind of funds are investing into. If you're happy with the returns and the risks that you are taking there, you might stick around. I am not in very much favor of selling things and buying new things, given that if something is working in a decent way for you. So yes. Shreya has this question. Please explain this term debt, SIP, NPO, open-ended and close-ended. So Shreya, you can unmute yourself. We can discuss this out.
Yeah.
Yeah. So Shreya, debt is basically you are a company, you want 10,000 rupees. All right, you come to me, I give you 10,000 rupees. In return, what you'll do is you'll on a yearly basis give me 10,000 rupees every year. All right, in terms of interest. और 10 साल बाद जाके आप मेरे को 10,000 वापस भी कर दोगे. So interest and principal repaid. So the agreement between us is a bond. All right. So that bond is nothing but debt. So you have taken a debt and I am basically the investor here. So that is how it works. So if you want to invest into such bonds, you can do that. And then you have SIP. SIP is systematic investment plan. And now say, for example, we are a salaried employee and we get our income regularly. So when given that we get our income regularly, we would like to invest regularly. So systematically you're investing your money. So automatically you can do that with platforms, with your mutual funds, where they'll auto deduct your auto debit the amount from your bank account, and they'll invest it for you. NPO is new offering. So new offering is nothing but whenever a mutual funds come in with a new fund, so they basically give out the units to the people that you come invest 10,000, 20,000, 50,000 with me and I'll give you the units. So that is NPO. Open-ended, close-ended is basically open-ended में वो units regularly देते ही रहते हैं जब आप मांगो, close-ended में एक ही बार देते हैं. ठीक है? So that is how it works. ठीक है?
Okay, thank you so much.
All right. Okay, can we invest in US funds? Yes, Ashok, there are some mutual funds that invest into US funds, so you can straight away search it, or it international fund or something. Okay, I'll take the last 5-7 questions. I think we're running short on time. I have Sujit has a question that he already has some existing funds and it is not giving good returns. Sujit, in terms of if the funds are not giving you good returns for 3 years, 5 years, compare them with other funds and then make an investment.
Yeah, more than 5 years. It's not
yeah,
giving.
So if that is the case, then it might be the case that the mutual fund is actually not performing well and the fund manager has not taken correct investment decisions. In that case, switching might be a good option there. If
so
we
if I do
and
index
if you do this
investing,
regularly, compounding में थोड़ा सा असर आएगा because आप taxation बार बार देते जाओगे. So again, there's one question that if you keep on changing mutual funds, as in you withdraw it, reinvest it. So in that case, compounding will get impacted in terms of taxation. So say for example, 10% tax है, 100 rupees becomes 120. You withdraw it, you pay 12 rupees tax on that. All right, not 12 rupees, 20 ka 10%, 2 rupees tax on that. So compounding will now not take place from that 120 rupees for you. It will take from 118 rupees. So why incur that 2 rupees? That is
okay. हाँ वो समझ गया, लेकिन let's say कि I have a fund that is not performing and I have stopped investing on that fund. I have started chosen a new fund and I have like transferred all my investing into that new fund and without withdrawing the existing fund. That would work.
In the now it really depends. If the funds are not performing, then switching is a good option. If the funds are performing decently well with the market, कि normal equity markets भी 14-15% से every year बढ़ रहा है पिछले 4-5 साल से, आपका fund भी बढ़ रहा है, तो it's good enough. ऐसा if there's non-performance at a very higher level in terms of vis-a-vis the market, then switching makes sense. Otherwise वो थोड़ा सा issue आ जाता है. Okay. Okay, can you suggest any good resource about learning about unlisted US shares? Unlisted US shares, Anuradha, you might not be able to get access to it as of now. There's no great platform as such for that.
Kunal,
actually, I think there are a lot of questions that that we need to answer. So, can we have it on mail, Aisha, if you're there?
Yes, can.
Yeah, can we have the questions on mail so that I can answer them all? I don't want to.
Yes, definitely. You guys can drop. We'll have like next 2-3 minutes. You can drop all the questions and we'll drop you all the mail. We could reply you better later.
Right.
Because we are already running out of time. And Kunal, you can take your last 2 questions.
Yeah.
Kunal,
so,
can I have one question? Just one.
Just a second. So we have this platform www.upsurge.club, which is exactly this, where we basically have a lot of content courses around markets, finance per se, and mutual fund is one topic that we'll be including in the next 1 month as well. So it runs on a subscription model. I'll simply put it across. So once you become a subscriber, you get access to everything on the platform. So mutual fund भी है, stock markets का हमको technical analysis, chart pattern वो सब सीखना वो भी है, valuation सीखना है वो भी है, and if you want to do a basic course on Excel, that is also there. So you can have courses individually, you can get access to them individually, or you can take it in one go there. So that is what the platform is. And for you guys, we have issued a coupon code as well, that is NOVA20. So I think I have already shared that across. I'll again share the platform's URL, that is www.upsurge.club, and NOVA20 is the coupon code that you guys can use. So yes, there are 2 questions that we can take. Yes, anyone?
Yeah. So yeah. So can you please put some light on tax harvesting? How can we do that?
Okay.
Yeah.
Tax harvesting is something that, so see, taxation on capital gains work is, say for example, I incurred a loss today. Or let my 80,000 became my 1 lakh became 80,000. So there's a loss of 20,000. Now since I have a loss of 20,000, अगर profit हुआ तो 10% tax भरता मैं. So say for example 2,000 का tax भरता. So what we can do here is मैं 2,000 का tax रख लिया अपने पास. Alright. Next time जब मेरा पैसा बनेगा ऊपर, if my money goes up and I make 20,000 rupees there, so again I need to pay 2,000 tax, so it gets nullified. You do not need to pay anything. So that is what tax loss harvesting is, that how you can use your losses in front of your gains to make sure that you are nullified in terms of taxation. So that is the idea.
So like, is there any way so that we can automate this?
No, you cannot automate that. You'll have to.
Like, is there any
out.
platform like?
No, not really.
Or any other platform giving the features?
Not really. So selling or buying individually होता है ना, तो आपको taxation perspective से भी individually देखना रहता है.
कितने साल का कर सकते हैं tax harvesting?
You can carry forward it. There's not an issue.
2021, 2020, 18 also, 18, 19 also.
You can carry forward it. मतलब 2 साल 3 साल वो issue नहीं आता वहाँ पे तो.
Okay.
Yeah. Okay. Do we let's take up one more question from the chat box. There are a few more. What are the parameters?
I think Ashutosh has been waiting. Ashutosh.
Yeah. Hi, Kunal.
Yeah.
Hi, Kunal. Okay. So AMC have 1,000 crore as a AMU, and the AMC have 1,000 crore as a AMU. In this month, okay, they get as a in the SIP they get 100 crore more money in this month.
Okay.
Is there any direct relation between the AMU and the NAB? Is the NAB increases? Is the money got?
Yes, there is a direct relationship between NAV and fund size. So fund size increases, NAV increases. No, fund size depend करता है क्या reason से बढ़ रहा है. Now you have posed a very important question. So fund size can increase through 2 aspects. One is fund ने जहाँ invest किया अगर उसका value बढ़ जाएगा तो NAV बढ़ेगा. ठीक है, fair enough. Now what the second scenario is, if more people invested into the fund, all right, if external money comes in, so new units will be issued, तो वहाँ पे NAV पे impact नहीं आएगा. So 2 ways to look at it. One is, if the fund size is increasing because the investments that have been made, the value of that is going up, in that case, आपका NAV भी बढ़ेगा. But in case, only people are investing more into the fund, and the fund is issuing new shares, तो NAV नहीं बढ़ेगा.
मतलब ज्यादा फंड आ रहा है तो मतलब एएमसी उसको रेगुलेट करने के लिए ज्यादा फ्लक्चुएशन नहीं होगा, इसलिए क्वांटिटी बढ़ा सकता है.
नहीं, मतलब वो, लेकिन हम तो उतने स्मार्ट है ना कि वी कैन सिंपली बेसिकली सी कि रिटर्न्स कितना आ रहा है. वो रिटर्न्स जो दिखता है यहाँ पे, ये एनएवी की बेसिस पे दिखता है. ये फंड साइज की बेसिस पे रिटर्न्स कभी भी नहीं दिखता. बट ज्यादा फंड साइज बड़ा होना इज गुड बिकॉज मोर इन्वेस्टर्स आर ट्रस्टिंग द फंड विद देयर मनी.
Kunal, I have one question.
Yes.
If fund size increases regularly, we do SIP, and fund manager picks the wrong stock. Like he is not able to manage the whole fund. How it will be divided? Are there any multiple fund managers will be there, or just one?
So generally, there's a senior fund manager there, and then there are a few fund managers with him. So say for example, the one that I have opened here, there are two fund managers here, Siddharth and Ajay. All right. So now again, a very good question posted out here. So you can look into their details, what they have done, where have they been, they've acted as fund managers, and see if you want to go in depth, you can basically see what kind of experience they've had and what kind of funds they've managed and what kind of returns those funds have generated in the past. So that would give you a lot of validation. So yes, one of the key important points when you select mutual funds, you can also look out for the fund managers and what their history has been. Is it a new fund manager? So see, you can see there are two fund managers. Now this particular guy, Siddharth, he has more experience in terms of managing funds. And the second guy, he has a lesser experience. Or he was appointed before 2019. He was appointed later on in 2021. So always there are helping hands. There are 2-3 people at the top making decisions, and then they have the team who helps them select the right stocks. So again, it's betting on the right player basically. So you select the right Virat Kohli, you'll make decent returns.
One more question. Like in stocks, some of the companies get delisted. Is it possible in the funds also?
Funds, are pretty smart that way. So what really happens is, say for example, the fund has picked up 20 companies. So out of those 20 companies, one is about to get delisted or has not been performing. देखो delist तुरंत नहीं हो जाते, मतलब वो खराब perform करते हैं फिर delist होते हैं. So say for example Yes Bank का case है, तो Yes Bank automatically मतलब तुरंत इतना सब कुछ खराब नहीं हो गया. Every day things started to go down. So funds have this mandate कि अगर कोई stock 2 quarter 3 quarter खराब कर रहा है, तो then they'll remove that from the fund itself. So they'll not wait till that extent कि चलो इसको खराब होने देते हैं, हम पूरा delist हो जाते फिर हम निकालेंगे, वैसा नहीं करते. So yes.
Thank you.
Okay.
I think this has been a lot. Thank you so much everyone for joining, and also thank you Kunal for being so patient and answering all the questions here. I mean, we have never extended beyond like 15 minutes maximum. That's what we have given, and thank you so much for taking the session with us. And I hope you like the session. Everybody who has joined, and maximum attrition also we are seeing here.
Thank you so much. You can drop down your feedbacks, on hello@upsurge.club, or you can simply write to me as well, Kunal@upsurge.club, whatever works for you. And in case you have further questions, you can shoot that as well. And in case if you want to go completely in depth, again, we have www.upsurge.club, where you can simply get access and, you use the coupon code of Nova20 and get access to a lot of things there. All right. Okay. Thank you so much. Thank you so much, guys, for being so patient and, taking so many things in one go. I think 1.5 hours to understand so many things must have been a lot for you guys as well. But I just wanted to make sure that by the end we are capable enough to select a few funds for us. So that was the entire notion behind the session. So thank you so much, Aisha.
Yes, thank you so much again, Kunal. And everybody, thank you so much for joining. I have just dropped a link for our future session that's happening. Also, feel free to check out Upsurge Club as well, where you can find all the finance related topics, where you can study, where you can go in depth on each topics within the finance and make your investment right. Thank you so much, everyone.
Thank you so much. Bye-bye. Have a great day. Bye-bye.